Welcome to Silicon Valley Asian Business Talk.
Hello, everyone. This is Roger Chen from University of San Francisco Center for Business Studies and Innovation in Asia Pacific. First, Joan, we want to thank you for supporting and joining our interview program. Would you please briefly introduce yourself?
Sure, Roger. Thank you for inviting me. It's good to be here. So my name is June Yang. A little bit about myself. Most recently, I was at Google Cloud for the past 5 years. And first, I was responsible for the compute infrastructure, AI infrastructure, and block storage business at Google Cloud, which is the largest business unit within Google Cloud, with multiple billions of dollars of revenue annual basis. The second part of Google Cloud, I was asked to take over the AI business. So I was responsible for the whole portfolio of AI products coming out of Google Cloud, as well as industry solutions that's applying AI and other advanced technology to various specific industry sectors as well. Prior to that, I was at VMware for almost 10 years and did a variety of roles and responsibility over there. I was responsible for vSphere business, which is a flagship business for VMware for a number of years. And I also had the opportunity to do in-house startup, and that's jointly sponsored by both VMware and Dell and so forth. And so it's been great to kind of running and scaling different business inside these corporations. And currently, I'm on the board of several corporations, both public and private. So I think certainly being able to innovate and scale businesses are really, some of the key discussions we have at the boardroom as well.
Risk factors to check before starting venture projects.
How do you decide? Let's look at a specific project. How do you decide whether or not to bet on a particular new venture project or new kind of a product? Probably it's at the Horizon 3 level. So what are the criteria? What is the mental model you tend to follow when you make those decisions?
Yeah, I think, with the Horizon 3, right, really what you're trying to get to is a product market fit. Really understand the product market fit. And then in order to get there, right, there's a lot of risk that's involved. So then the whole process, what you want to do is that you really want to sort of de-risk the project as much as possible and then be in more and more confidence as you go along the way over here, right? Initially in the product ideation phase, right, you're actually just explore a lot of different ideas. And then you want to very quickly get to a smaller set of ideas that's actually, that has a higher chance of success, right? So, some of the things I look for is like on the market risk side, right? I look in terms of, hey, does this product actually have a big enough market, right? And then the big enough market depends on what you're looking for, right? Like for me, it's like, look, if the product doesn't have a 500 million to a billion, it's not really worth it to invest, right? Yeah. But if you're a smaller company, like I think 100 million market size, it might be good enough for you. So I think that's kind of one to sort of think about that. When you're successful, you want to make sure the success actually moves the needle for your portfolio and for your company. And then the other thing I look for is, let's say, look, is this need actually urgent? Like people need it today. And so I usually use the sort of the analogy of vitamin versus aspirin, right? It's like something you need today. And sometimes, you're creating something that it might be nice to have, but especially in enterprise setting, nice to have doesn't get converted into sales. So it really has to be something that's actually really a pain, really urgent need to kind of for customer, and with a really demonstrated value. And then you also wanted to sort of look in terms of, hey, what's the customer willingness to pay, right? How much are they willing to pay? There are some businesses, like the willingness to pay just isn't very high. And and then it may not be sort of worth it. So that kind of goes into your whole market sizing, revenue, and so forth. And of course, you also look for the differentiation. You differentiate with other competitors as well as alternatives out in the market. So that's a lot of things that's really on the market risk side that you're trying to de-risk in these kind of areas. And often in a lot of these, Horizon 3 type of exploration, there's also a lot of technology risk, right? A lot of times you're looking at the technology and say, hey, there's a new technology out here. And is it, something that's actually going to bring us value? And then is this, technology actually ready for prime time? And is the technology from a price performance perspective actually make sense for enterprise? So all of those things has to be sort of factored in to say, hey, there are some things like, look, to say it's a great idea. It's just the technology isn't quite there yet. or the price point isn't quite there yet, you might shelf that and pick that up, a couple years later, and revisit those kind of things. And there's also go-to-market risks, right? Go-to-market risk could be, what is your route to market? Is it something that can tie into your current businesses? If it's something that you have to actually open up entirely a new business channel and new route to market, that's a much more expensive. So I would think really hard about sort of getting into those type of business and really making sure that my confidence is super high, a lot of conviction, to really kind of ask for that level of investment and pushing that kind of level of investment. And often you also have, execution risks, right? Do you have the right people and with the right type of, profiles for this project? Do you need partnerships and so forth, right? So, for example, one of the startups, I did in-house startup at VMware was VMware Cloud on-prem, right? So for that particular case, we actually needed OEM a server partnership. So until we can secure that server partnership, it's really a no. It's really a no-go, right? So these are things you're trying to do, really trying to de-risk the project as much as possible and building more and more confidence along the way. So by the time you make a decision, you feel like, hey, look, I have a lot more confidence and I feel good about where this is going. And then, of course, throughout this process is really about like validating all of these ideas and so forth. And sometimes we're prototyping, sometimes working with potential customers and design partners and so forth. It's really about sort of trying to get as much risk out of the system as possible. You're still going to run into plenty of unknowns, but for the ones that's known, you're really trying to de-risk as much as possible.
That's excellent. So basically, you mentioned for the Horizon 3 projects, like de-risking or managing those risk factors is very crucial. Can you kind of maybe shed a little more lights on how do you translate this de-risking mindset into the project milestone management? For example, when you set the milestones, checking the checkpoints, how do you kind of integrate this de-risking mindset as you manage the progress of those projects?
Yeah, I think there's a variety of ways, depends on what risk you're trying to sort of mitigate, right? So certainly from a market and customer sort of a customer willingness to pay and stuff, those are really about identifying core customers and target customer profiles and so forth, and actually really get a sense of what the customer's willingness to pay, what the pain point really is, and so forth. And also, I think it's a little bit as like when you talk to customers, whether in the context of focus group, one-on-one, and so forth. People don't like to say no, and so they tend to give you a more favorable answer than what your product is actually going to hit on the market. So I always take a big discount in terms of what customers say that it's like, oh, I really want it. And if you have like 20 customers, think about maybe 10 of them might convert or 5 of them might convert, so that you don't want to sort of necessarily take it at face value. For the technology risk, it depends on what technology you're trying to do prototyping at these early stages to really get a sense to say, hey, look, if we're trying to use AI to solve this particular problem, let's take a look to see what is the, out of the box quality look like, and what are the potential ways to improve the quality, so that you actually get a pretty good feel to say, hey, look, we're pretty confident we can deliver something that's going to meet the customer expectation. The go-to-market risk, I think that's much more of analysis, right? To kind of working with the sales guys to actually to see if, what would be the, sort of the route to market, and does it tie into the existing flywheel and so forth. So I think, with this type of, product innovation and so forth, I think you can set some broad milestones, but I think it's really about answering these set of, sort of questions and risks and so forth out there. But for a given product, one risk might be higher than another one. So I would pivot towards one. If the technology risk is what's going to make it or break it, then we'll spend a lot more time sort of driving the technology. If it's really like, we don't know if this, the go-to-market can work, then we'll spend more time on that. So I think it's more adaptable. It depends on the type of a project and depends on the profile.
Okay, that's great. So, actually, my earlier question, what I probably want to ask was, as you set the milestones, testing these different uncertainties, do you tend to kind of, test a certain type of risk factors earlier in the exploration process? Or then just, once you check that particular risk factor, then you move on? Or really kind of, depends upon which one is the most obvious to you to test first, or the market-facing factors to test first. So do you have any kind of considerations on those kind of a sequence to de-risk these different factors?
Yeah, I mean, I think if there's certain risk, that's going to be a no-go decision earlier on, right? I would spend more time doing that. Because even if everything else checked out, but for example, your technology doesn't work, then that's a waste of time. So I would spend more time sort of dealing with those type of managing those type of situations.
Okay. Yeah, it makes sense. These are, actually, this is a quite, similar to what I heard from the other sources that Google does, where they kind of basically, kind of front load what they call the most, the riskiest of factors. If they cannot prove that they can overcome those riskiest factors, then basically you just kind of stop the project, which, I think makes a lot of sense.
Thank you for watching.